Does take us to our talk of the tape. Too frothy or just right? That is the debate for investors right now as this bull market continues to run. Let's ask the Wharton School's Jeremy Siegel. He joins us now live. Professor, it's nice to see you as always. This has become somewhat of a Friday tradition, and it's a good one to have.
I enjoy it too, Scott.
Some are calling this setup Goldilocks. Is that how you see it?
Yeah, I mean, take a look at the employment report. In fact, all the economic announcements over the last week have been very close to target. We had a little weakness in the household report, a little tick up in the unemployment rate, but everything else is working exactly the way the Fed wants. I think we're going to have one rate cut on that December 18th meeting, but truthfully, I think only 2 or 3 rate cuts next year. I think this strength could last. And, you know, with the stubborn inflation, I think that the Fed is going to settle down somewhere between 3.5% and 4%, not the 2.9% that they put in the last SEP report in their September meeting.
So, okay, one in January or December. You don't sound like you think it matters much at this point that, you know, in some respects, the Fed's been taken out of the game. I mean, Beth Hammack, the Cleveland Fed president today said, quote, "I believe we're at or near the point where it makes sense to slow the pace of rate reductions." Market doesn't seem to really care.
Well, I think you do care. There is an awful lot, and especially for the small firms, business loans that are based on that Fed funds rate, 1-for-1. The prime rate, what used to be called the LIBOR rate, now it's called the SOFR rate, short-term borrowing rates of corporations and others. So there is a lot that is pegged to that rate. But for the big firms that it can access equity, long-term bonds and all that, I mean, all those rate cuts or whatever the Fed is doing is already incorporated in those rates. So in that particular case, that's already there. But it could make a difference for the small and medium-sized firms.
Sure. I mean, I do have some strategists who are kind of looking through all of that and saying, well, S&P can hit 7,000 next year, if not more, at this point, because the earnings picture is going to be good. You're going to get deregulation. You're going to re-up the tax cuts, and you're going to have other stimulating events around the economy and growth. Do you believe that, too?
Well, the current estimate is a 17% increase. So it is very bullish. I think we will re-up those tax cuts, that expire at the end of next year. It would help if we got down to a 15% rate that Trump has talked about. I'm not too sure he's going to get too much more than a re-up on that. Deregulation is always good for the market and particularly good for the small and mid-sized stocks. So, that sector could really shine while maybe the Mag 7, which an incredible 70% return so far this year, really might take a rest in the market.